Okay, so hello and welcome to an intraday cryptocurrency trading strategy which will be implemented in Python. So what's the strategy? We are buying when the 10-minute return is positive, so above 0%. And also the 5-minute return is lower than an extreme value, let's say minus 1.5%. We are then selling when we either made at least 1% profit or when our trailing stop loss of 3% is touched. So the idea in words is to capture very short-term reversal effects and try to take advantage of them without sitting too long on a position. Let's take a look at an example to make this more clear. As you see, we are buying the coin at 13.25. Why? Because our two buying conditions are fulfilled. First one is 10-minute return is above 0%. So let's check. At 13.15, we have a price here. So clearly, we have a return of over 0%. However, the 5-minute return is largely negative. You see, 13.20 here, negative return. So we are buying the asset here and then sell whenever we hit a 1% win or if our trading stop loss is being triggered. In the video description you will find a list of prerequisites I highly recommend to check out before or also afterwards. Important disclaimer, this video is not an investment advice and is for informational and educational purposes only. Cryptocurrencies are not regulated and cryptocurrency trading involves a high level of risk. Alright, let's get started. As you see, I already pulled cryptocurrency price data using the Binance API. I've covered how to do that exactly in a previous video, which I will link in the video description. So for now, I pulled 1-minute granular price data for ETH starting May this year. With that, I'm getting a data frame like this, containing 250k rows, open, high, low, close data. 1-minute granular here. So just as a hint, this will take some time to execute because this is pulling a lot of data from the API. There are better ways to work with this huge amount of data. I've covered that in actually my last video. I will link that in the video description. Anyhow, so first of all, we are going to calculate the 10-minute return for our strategy. Therefore, I'm just adding a column here, 10-minute return. And what I'm going to do is I'm simply taking the close values and divide them by the close value 10 rows before. So for the first 10 rows here, it doesn't make any sense, right? Because there is no previous row. But for the rows after that, it does make sense. And with that, I can just calculate my 10-minute return. So just take my close, divide it by the shifted close by 10 rows, and then subtract a 1. So take close, divided by the shifted close by 10 rows, and subtract a 1. Same for the 5-minute return. So adding a column here, 5-minute return. Change the shift to 5 and rest stays the same. And with that, I have two new columns here. Alright, so as you see, the first are containing NaN values because there are no previous rows here. You can drop them if you want. Drop NA and place true. Maybe a bit more lucid here. Okay, so this is the two parameters we need to make the buying decision here, right? Now let's define the buying signal, and the buying signal I'm also storing in a column here, just calling that signal. And now I'm just checking for the 10-minute return being above 0 and the 5-minute return being below minus 1.5%. So I can define where my 10-minute return is above 0, and also my 5-minute return is smaller 1.5%. That's already it for the signal. I have to do one more thing to avoid a forward-looking bias. So whenever I'm buying something which is based on the close, I want to buy on the next day's open here. So I'm simply shifting this whole column one row back so that I can take this value then when my buying condition is fulfilled here. So I can simply take, if that would be a true signal, then I can simply take this next time steps open price here. So I have a little cough here, so apologies if I'm coughing. I'm pretty sure I won't be able to cut it all out in the end. Anyhow, let's do that. So calling that shifted open. Use my open column and shifted one row here. So I will show you again how this is looking like. So this is just this value here. So if I'm getting a signal here, I can directly take this as my buy price. Okay. And that's already everything we need to formulate our trading strategy. So let's first of all define some variables. I want to have a Boolean variable if I'm in a position or not. So initially I'm not in a position, so I'm setting that to false. Then I'm creating some empty lists where I store some information. So I need buy dates and buy prices. Creating 2 empty lists for that, and same for sell dates and sell prices. And now let's populate those lists. I'm working with iteros here. So yeah, read yourself in that, otherwise it will be quite hard to understand. So for index row in df iteros, if I'm not in a position, so this is the buying case, right? If I'm not in position, I want to check my buying conditions. So my buying condition is if my signal column has a true value. These are those 2 conditions here. And then I want to buy. So when I buy, I first want to store the buy price in the variable buy price. So I'm taking, as I just explained, I'm just taking the shifted open to get the next time steps open. I also want to store for my trailing stop loss. I want to store my stop loss anchor, and my initial stop loss anchor is my buy price. And then I want to append to my buy dates the index to have my buy date stored, or rather my time stamp, not only my date, but my exact minute when I'm buying the asset. And I also want to have my buy price stored. So I'm just appending my buy price to the buy prices list. And finally, when all this is done, I want to set my in position variable to true. And that's already it for the buying logic. If I am in a position, I want to check our selling logic. And first thing we are going to check is is our trailing stop loss up to date? So we are checking if the close is larger than my stop loss anchor. Then I want to have a new stop loss anchor. So I'm redefining as an anchor is equal to the close, which is larger than the stop loss anchor. And with this, I'm keeping track of amending prices here. So this is simply the trailing stop loss logic here. I've also covered that in another video, which I will link in the video description. Okay, this is the trailing stop loss logic. Next, we wanna define when exactly we wanna sell here. So we are defining if row close is smaller than my stop loss anchor times 97%. So 3% stop loss we defined in the beginning, right? So this is our stop loss condition. So the amended stop loss anchor times 97%. This is my stop loss, and now my target profit. If my close is larger than my buy price times 1.01. So if I have 1% profit, I wanna go out. Again, stop loss, target profit. Sorry for the confusion. When this is happening, I wanna append to my sell dates list and also to my sell prices. And again, I'm taking the shifted open as I can only sell on the next time steps open. And finally, I'm setting the position to false again. Okay, so this is our whole trading logic. So we can execute that and take a look at what we have. So first we could take a look at our buy prices, for instance, then our sell prices, and yeah, also buy dates and sell dates. You can check that for yourself. But for now, we want to calculate the profit of our trades, right? So I'm doing that with a list comprehension here. So I'm taking sell minus buy divided by buy. So simply the relative profit calculation for i.e. in zip sell prices, buy prices. So what am I doing? I'm simply subtracting the buy price from each of those elements here. So each of those elements here, buy prices, I'm subtracting from each of those elements here. Nothing more than that. You can also do that in a data frame. It's a matter of preference. Of course, pick the right naming conventions here and not do totally mindless stuff as I just did. And with that, you will get your profits, your relative profits per trade. So let's store that in profits. And this at least looks quite positive. So let's evaluate that, just creating a series out of that so that we can have an easier time analyzing. So we could take a look at, let's say, the winning rate. Oh no, let's do the overall profit first. So add 1 to that and take the products. So this is just cumulating cumulating returns. I've covered that in another video in case you don't understand why I'm doing this here. So overall, as you see here, we made 19.5% profit using this strategy. This is without fees, so let's make it more realistic. Before that, I want to quickly plot the equity curve here. So taking the cumulative product and then plot it. Looks like that. So first we are starting to win, then we are losing. So we have some triggering of stop losses here, but in the end it worked quite well for us here, right? So let's include fees here. So Binance is charging 0.075%. So it's charging 0.00075 per trade. So you have to multiply that with 2 to get the real transaction costs here, right? So we have to subtract 0.0015 from each profit here. So we can do that in the list comprehension here. So just subtract minus 0.0015 and have included fees. So you see 16% now, but still quite remarkable, right? So in the meantime, what's interesting about this is, if you take a look at the ETH plot itself, in this time ETH is dropping from roughly 3k to something around 1 something here, right? And we made 16% profit including fees, which is at least something one should take a closer look at. In terms of winning rate, we can also show that here if you're interested in that. Just take the profits, check for those larger than 0 and count the values. So we got 18 wins against 2 losses. So well, you can calculate that in your head. So 90% winning rate here, right? What's cool about the strategy is, so there's a lot more to do, right? So these are just some parameters. Maybe they're better parameters. Maybe there are other optimization potential. Is other optimization potential here? Yeah, but what I want to show you is something very interesting. Now, if we were to do all of that on daily data, right? So time frame independent. So we are doing that all with daily data. You will see some interesting results. I want to do that in another notebook because I want to show you that you can trade the strategy and simultaneously trade that on a daily frame. And you are not getting overlaying positions, which might not be surprising for you, but I just want to show you that this is another interesting thing about this strategy. So let's open up a new notebook here. And yeah, let's copy paste that over fastly. Change that to 1 day instead of 1 minute. Pull data, same stuff here. So this will take 1 second because this is only 170 rows here. Then same stuff. So of course 10 minutes is not now 10 days. 5 minutes is now 5 days, right? So I think you got the point here. Yeah, let's drop that. let's just keep everything as it is. Run the loop. And take a look at that. So we even got 35% win on the daily time frame, right? And I didn't even look up other time frames yet. But what I wanted to show you is if I'm taking a look at the buy dates here and check for 22nd here, 22nd until 23rd, and compare that with our buy dates in the 1 minute time frame, I don't have it here, right? So I could potentially trade that on multiple time frames without even having overlapping positions. So I think this is definitely something to take a closer look at. I think it's interesting, but as I said in the beginning, this is not an investment advice. I will do some further research on that. I hope this was for now interesting to you. If you're interested in a continuation of this, let me know. And yeah, thank you very much for watching. Sorry for the coughing, but even I am getting sick, right? So I'm just kidding. Thank you very much for watching, and I'm looking forward to see you in the upcoming videos. Bye bye.